Hello, everyone, and happy Financially Lit Tuesday. So, back at it again with another Financially Lit Tuesday. Today, I'm going to be talking about individual taxes, giving you some details and things like that in preparation for taxes in a few months, just so that we can get a little refresher as well. So, for those of you that are tuned in, um, if you're not doing so already, be sure to follow the Grand Red page on social media. And if you're tuning in from YouTube, from the Sipping Wealth YouTube channel, be sure to hit the subscribe bell and a notification bell so that you don't miss any more Financial Lit Tuesdays. For those of you tuned in, go ahead and say hey to your girl. Hey, Eni, what's up? You turn it up tonight. So, for those of you tuned in, definitely drop a comment in the comment section, and then be sure to share with your friends, families, loved ones, all that good stuff, because we don't want to hold all the wealth to ourselves. We want to make sure that we're taking our friends and families on the journey with us and sharing this awesome knowledge. So today is going to be a pretty loaded topic because we're talking about taxes. You know, you don't just want to wait until the beginning of the year when you have to file taxes to really have that discussion. In lieu of taxes just coming up shortly, and also the deadline for our people that extended their taxes is coming up September 15th for our S Corps and partnerships, and October 15th for our individual people and LLCs and all that good stuff. So make sure y'all to avoid those penalties because they do get hefty. Make sure that you're meeting those deadlines. And go ahead and get into the topic. Of course, if you have any questions while I'm speaking, make sure you drop it in the comment section. If you want to say hey to your girl so I know who's tuned in with me, go ahead and drop it in the comment section as well. So of course the fall months, little Netflix and chill months is upon us. Slippers month. So go ahead and bring your sweaters and all that good stuff back out. Pretty much, well, if you're in Florida, hold off a little bit. But it's that time of the year. And with that being said, of course, taxes is coming up. So we do want to make sure that, we have the deeds. So for those of you that are considering filing taxes on your own or that file taxes on your own every year, but you don't really know what you're doing, yes, this is the live for you. So tonight I'm gonna do the first part of a 2-part series on tax filing basics. So just kind of making sure that everybody's kind of aware of the basics of taxes. So you have an overview, and then I got a little surprise for y'all at the end. So make sure that you're hitting the share button so that your friends and families could get in on this surprise at the end as well, or in the middle and all that. So, in the famous words of Benjamin Franklin, in this life, nothing is certain except death and taxes. Because the IRS, regardless, is going to make sure they come after you. Your state legislators, they're going to make sure they come after and get, hey, Facebook user. I don't know why it says that on my end. But of course, those are things that can't really be avoided. But we can work to getting them as low as possible. So, you have your property, different type of taxes. You have your property taxes, estate taxes, income tax. You have sales tax. The list goes on. There's literally taxes on just about everything. If there isn't taxes on it, they're figuring out a way of how to put taxes on it, right? So with that being said, I want to make sure that you all are, well versed in this, at least to some level of understanding. So that's why I drill it throughout the year, and I talk about topics revolving around tax, because it's a huge burden for a lot of people. Well, they have that little burden, like, oh, these taxes is killing me. Because I know definitely, like, before learning the about income taxes and things like that and how to decrease them, some of them I can't really decrease. but well, as much. But we try to do what we can as far as decreasing that, because 4.5 months out of the year, so almost half of the year of income that you're receiving for the average employee is going to taxes alone. Like, that's crazy. We have 12 months in the year, y'all, right? And for more than 4 of them is just taxes alone. Right. Like, so if we can find a way to decrease that, to make sure that we were knowledgeable in this, let's do it. So let's touch on the foundation of when and why we file taxes. So income tax is a mandate by the federal government and some states. Majority states do, well, a lot of states do state taxes as well. So Florida is one of those great states that don't have state taxes, but you have a lot of other states that do. So Georgia really, like I said, majority of the states have state taxes. And it helps fund social sources, programs, the police departments, Social Security, Medicare, which is sketch, is looking a little crazy. Social Security, Medicare is not going to really be available, but transportation, so public transportation, things like that, infrastructure. So Biden just passed that huge infrastructure bill based on Americans' tax dollars, right? So education, medical research, things like that. So they do, taxes do fund a lot of the things that happen around us. Most people who earn income, will owe income tax, or you're paying income taxes throughout the year to not, so that you can negate having to pay that lump sum when it's time to file your taxes. If you're an employee of a company, of course, when you receive your paycheck, and if you're a W-2 employee, when you receive that paycheck, your employer already deducts those taxes from your check. So they're like, hey, I'm paying it on your behalf. And then on top of it, the employer has to pay their employer portion of your taxes as well, for them saying, hey, I have this employee and I'm going to pay you, government, for employing this person. Kind of like that. But essentially that's how it works a little bit. So it's being deposited to the IRS on your behalf. So after the year closes out and it's time to file your taxes, everybody's talking about refund. Ooh, where's the IRS with my money? But a refund is not like, it's just what it is. It is a refund. So throughout the year, your employer is making these tax payments on your behalf. So at the beginning of the year, when you're about to file your taxes and you're getting a refund, that just means you overpaid the IRS. So they're saying, hey, you gave us too much money. We're going to give you some of your money back without interest. So they don't pay interest, but they do hold on to your money. But essentially, like, that's how these systems work. When you're expecting a refund, you do have credits like the child tax credits, education credits, things like that that help offset your tax bill. But your tax bill is still there. Those credits just decrease your tax liability. And then say you received an education credit, a non-refundable education credit. So you're like, hey, I paid $6,000 in taxes during this year through my W-2. But I was only supposed to pay $4,000 because of my income and everything put together when they did my tax filing, the standard deduction, all that good stuff. Now they're saying, hey, with that credit and the $2,000 you overpaid, we're going to give you a check for $4,000. So that's everybody got me? Does that make sense? Let me know if y'all with me now. If I'm losing you, if I have to explain anything. And of course, if you have questions, feel free to ask. Don't be afraid at all. So you do receive these forms from your employer, your school, the banks, your health departments, things like that, that give you a form. So you have your 1099 forms, which are supplemental income forms. So they're different income sources outside of your W-2 income directly from your employer. Then you have your school tuition, right? So that's a 1098T. So your school says, hey, you paid us money this year and you receive scholarships, you receive this, and we want to make sure that you get a credit for going to school or paying these accredited institutions. Here's a 1098T form for that. Your bank. So if it's a mortgage, if it's interest, maybe it's if it's a mortgage and you have a 1098 form that you can use to itemize on your tax return, whatever the forms, but you collect all these forms all together, and now you're like, all right, I'm ready to file. But you do want to make sure you have all your forms together before you go ahead and file, because what ends up happening is you have to do an amendment, or if it's something small like, oh, you receive interest for $2, then of course you're not going to amend the whole tax return for that, right? But if it's something like, oh shoot, you forgot to report income that you received from somewhere else, and that was $10,000, the IRS definitely wants their cut in it, and they report it on their behalf. So how does the IRS know about this money that you have, right? They know because the other person reports this. So as an employer or as a person that hired a contractor, what I do is issue a W-9 form, which says, hey, this person is going to pay their taxes on their own, right? So so they're going to pay their taxes on their own. I'm just giving them money, but I want to let you know that I'm giving them money, and I also want to be able to write off the expense. So at the end of the year. Hey, Brianna, thank you. Coming to you. They messed mine up this year. Oh, yeah. So that's another thing with filing your tax returns. Make sure that you're going to a knowledgeable professional. There's a lot of people out there that are preparing taxes, tax preparers, and things like that. But you want to make sure it's somebody that knows their stuff. Because data entry, the basics of taxes is data entry. But to actually make sure they are filed accurately and you're getting the best bang for your buck is making sure that you're looking at tax laws and how they apply to your situation to decrease your tax liability. So it's all about tax law. If they know tax law, then all right. But if they know like all tax preparation, then that's data entry. That's putting the forms in low software on Tax Act or whatever into it, and coming out with some numbers. But you do want to make sure have somebody that knows tax law. I'll go over some more things in a little bit after I get into this. So yes, so you give them a W-9 form. They put their social on there or their EIN number if they're a business. They put their name, their legal name, their address, and then they put they sign. This is a W-9 form, just saying, okay, here's my information. And then you give the IRS and the person and the contractor a 1099 at the end of the year or the beginning of the year. So that's, you send IRS their copy to show that, hey, I paid them. Now you got to go to them to find your tax cut from their money. And then the person has to report that same 1099 on their taxes as well to show, hey, I did indeed receive that money, and here's your cut, your taxes out of the money I received. For W-2 people, how it works is your employer, when you start working for them or at the beginning of every year, and you have to do a new one every year, even for W-9 contractors, you need a new one every year. So at the beginning of the year or when you start working for your employer, they give you a W-4. So this W-4, you're going to put your dependents on there, your legal name, address, social, all that, right? And now the employer says, okay, I'm going to pay your taxes on your behalf, but I'm also going to pay my portion of your of taxes owed to you to the IRS as well. So they send it all to the IRS on your behalf, and at the end of the year, same kind of system with the 1099 people. I send, as the employer, I send the IRS a copy of your W-2, and I send you a W-2 to put on your taxes as well. So now the IRS has a copy, you have a copy, and the IRS is waiting for you to put it on your tax return because they want the second half of the equation, right? So that's essentially how it works with these forms, and that's with all the forms. But some forms you don't really have to report, depending if it's like a minimal amount, or if it's if you're not itemizing your tax return. So forms, if you're not itemizing your tax return, which means you're not taking the standard deduction. So the standard deduction is a deduction that the IRS gives you and says, hey, because of the standard of living, you don't have to pay taxes on this amount of money, which is generally for individuals, $12,400, $12,500, around there. For the people with dependents, head of household, $18,000 in there. And then your married people is 2 times the individual rate, and then up from there. Now, this standard deduction is, like I said, hey, the IRS says you don't have to pay taxes on this amount of money. So if you made $20,000 that year, you don't have to pay taxes on $12,000 of that money, if that's the standard deduction. So generally, when you're calculating your W-2 taxes, they don't take that full amount into account. So when you go to your tax return and you made $20,000, but when you pay taxes during the year, they didn't take that standard deduction into account. So most of the time you're receiving some kind of refund. Unless like the income is way higher or they didn't remove enough taxes from your check. I want to make sure. Okay. So, like I said, the IRS and the employee has both sides of the equation. You file your taxes, the standard deduction. Now, after the standard deduction, if you're like, hey, I have a lot of medical bills, I have I have homes, mortgages, things like that, qualified expenses, like qualified deductions. So there's a whole list of them on the IRS website, right? What does this mean? It means if my expenses is higher than the standard deduction, which is that what I just said, if it's higher than that, that is now I should itemize my tax return, because that means I can bring down my tax bill because my expenses, my qualified expenses, are higher than the standard deduction. So it doesn't make sense for me to skip out on itemizing when I could take that standard deduction, because I had like medical bills, mortgage, property taxes, all that, charitable contributions, things like that. Is it better to claim 0 or 1 allowances on the W-4? So it depends on you. If you're like, hey, I don't want the IRS to take my money out during the year, or I want them to take out less. I want them to take out less during the year because I want to keep more money from my check. Then put 1 on there, But if you're like, no, IRS, I'm not trying to owe anything at the end of the year. I want you to take out the max. I'm not trying to have to, then you could put 0. And 0 means, hey, I'm not claiming anyone, like any dependents or anything like that. I just want you to take out the taxes based on the bracket I fall under, take it all out. And then I will receive a refund later if it's high, if it's too much. Which one's better? It depends on you, like I said. Are you okay with having a tax bill or possibly having a tax bill at the beginning of the year? Or are you okay with saying, you know what, I'm gonna have them take out more money. I don't want to worry about it. It's up to you. Hopefully that answers your question. Let me know. Okay. Okay. The bracket system when it comes to taxes. So how do you calculate how much taxes you're going to owe at the end of the year? How it works is there are different brackets, right? So you have your 10%, 12%, 17, 15% or 17, one of those, 22, work from there. And whenever a new president comes in, they change the tax brackets or the tax laws, and they're like, hey, we're going to make it like this. So these brackets, it work on the amount in that group. So from 0 to 9,000, you're taxed at 10%. From 9,000 to 40,000, you're taxed at 12%, and so on and so on. So it works off of like a bracket system. Tax day is April 15th every year generally, but because of COVID, we had a little May 17th, and the previous year was I can't remember anymore. But yeah, so you have your extensions because COVID, but generally tax day April 15th. Woo. And taxes start generally on January 15th is the first day that you can electronically submit your tax returns. Now you can go ahead and go to your tax preparer, your tax professional, go to Grand Rev, or if you're filing it by yourself, you can go ahead and file it, but you can't submit it until the window opens up. And generally it's like January 15th, around that time. All right, so I do want to touch on, in closing with this, that we do have a tax course coming out, and that will be released shortly. So the website that is located in the comment or in the caption section of this post. So it is learntaxcourses.com. So if you're like, hey, I want to save money in the future and just learn how to prepare my return or learn the basics about taxes, and I want to make sure I grasp taxes a lot better, then you want to go to that website and enroll in one of the courses. So what this is going to help do, if you're like, hey, I don't want to do my own taxes, but I want to understand taxes more, because at the end of the day, this is your money. You have total control of your money and what it's going to do. I can file your taxes all day long, right? But if you're making these different decisions during the year with no strategy because you don't understand taxes, you're missing out on money that you could save, right? That you could put somewhere else, that you could put in investing, that you could put in more property, whatever the case may be. You can have more kids with it. I don't know, right? Whatever it is, you can utilize that money elsewhere. So what this course essentially helps you do, it helps you understand tax law a lot better. And of course, like I speak with Financially Lit Tuesdays all the time, I'm a fluid teacher in the sense where I break it down. So I'm not going to throw a big terminology at you and then watch you suffer. I'm going to break it down to the very basics so that you properly understand how everything works. And then now during the year, you can do certain things with your money so that you can decrease your tax bill at every year. And that's how, you have these billionaires paying $0 in taxes. It's their tax strategy that's saving them. It's not and it's because they themselves, have know about taxes themselves, but because their accountant is informing them, things like that, but they also have an accountant on their team. Now, for those of you that don't necessarily have an accountant on your team, I'm your accountant. No, but seriously, for those of you that don't have an accountant on your team just yet, that's giving you a strategy, that's meeting with you every month or so, giving you a strategy, then your thing to do is to make sure that you have a better understanding of tax law. So that's what the course is at learntaxcourses.com or learntaxcourse.com, so that you can go ahead and enroll in the course. It will be launching out next month. So definitely make sure that you're tuned in. The website should be up and running shortly, and you should start seeing the promotional material pop up, and I'll bring it up during the lives as well. Um, for my people that are like, hey, is there a second source of income in this? How do I prepare taxes for other people? We have an extended version of the course as well to help in the people that want to actually prepare taxes for other people, so their family members, their friends, things like that. As you probably may know, I had contractors last year working under Grand Rev. So working with Grand Rev is an option if you're like, hey, I don't recommend jumping out in the first year and this on your own, but actually learning and having someone by your side throughout the tax season, as well as everyone that goes through the course, whether you're just preparing it for yourself or learning for yourself, you do have us throughout the entire season at your disposal to ask any questions that you may have. So like I said, it is learntaxcourses.com. The link is in the caption. And thank you everyone for tuning in to another episode of Financially Lit Tuesday. Next week is going to be another amazing topic. And be sure to hit the share button so that other people, your friends, families are on board with this wealth of knowledge as well. Because we don't want to keep it to ourselves. Like I said, don't be stingy out here. Try to keep all the goodies to yourself. But make sure that they're informed as well. I went over a lot of information tonight. But make sure that, you're spreading it as well. So hit the share button. For those of you tuning in from YouTube, go ahead and hit the subscribe button and the notification bell so that you don't miss any episodes of Financially Lit Tuesday. And thank you all, and have a wonderful, super lit rest of your Financially Lit Tuesday. Thank you for tuning in, y'all.